Let's get in Deven Choksey, who joins us this morning of KRChoksey. Hi, Deven. Morning. Thanks so much for joining in. Well, let's start off with a couple of earnings reactions, Deven. Coal India, that's been the star of this year. It caught everyone, by surprise. The underinvestment in fossil fuels, that's what's led coal prices higher and the stock price as well. But these numbers were a little bit disappointing, though they have the sweetener with regard to their dividend. How do you read it?
Yeah, Nigel, good morning. Well, I think from the expectation point of view, I think there may be some kind of a let-off that is possible. However, if you look at, I think, the volume growth as well as I think the growth driven through the pricing, both of them have basically worked in favor of Coal India as I see it. Going forward as well, I think given the kind of higher amount of volume that the company is now producing, is likely to remain sustainable. So from that perspective too, I think the earnings could possibly be driving in the positive direction going forward. Earning growth particularly could be driving in the positive direction in coming period. So I think, and along with that, as you rightly mentioned, I think the dividend remains, I think, a sweetener because the company distributes a good amount of dividend along with. So that way, probably the things could work. However, specific investors only would remain with, I think, likes of Coal India and other PSU companies. So from that perspective, don't expect too much of a large following coming in into the public sector undertaking companies. Maybe I think the re-rating on the stock probably has happened from what it was earlier, has already happened, and I guess I think it will continue going forward.
Okay. What about Paytm, Deven? The losses for the company have gone up and the pre-IPO lock-in ends on the 15th of November. So lots happening over there. Uh, but the number of customer acquisitions have also gone up for them. So things are not that bad. But tell us, how are you approaching the stock now?
Yes, Sonia, good morning. Well, I guess I think the views haven't changed. Till the time company shows how they will produce profit, even if they end up acquiring customer at the cost of profit, I think I would not be excited at all. Because in a tech-driven business, I think it is very easy that somebody else could possibly, I think, disrupt you if he has a better money power than you. So one thing is very clearly understood in this case also that even though they have been acquiring customer, even though they have been adding more volume, but they are making business, I think, at a loss. Till the point of time, I think you make money. I think this particular business cannot be bought into the portfolio. That is my clear understanding. And that's where I would think that I think we will wait for more time, I guess, I think if they end up making more money. But otherwise, I think clearly look at some other alternatives.
All right. Devin, the two areas, right, which saw huge momentum for the last couple of days is public sector banks, and that continued. SBI, BOB reacting to results, but I mean that kind of sparked off another rally on Monday. The index was up 4%, and then you have these rail infrastructure stocks, RVNL led, but IRCON, IRFC, etc., which did very well. Any thoughts on both these spaces?
So fortunately, Prashant, I think public sector banks are now having better liability management side to talk about. On one side, I think they are having lower cost of deposits continuing into their books. On the other side, fortunately, the corporate center buying has started happening for money, both from working capital side as well as from the term loan side. And as a result of which, I think these banks have started seeing traction, they have started seeing growth. And not to forget one more aspect, they have been recovering the earlier provided NPAs into their books. And that is where probably I think the balance sheets have started becoming more stronger going in this period. I would think that given the kind of valuation that they have been and they are currently, there is a scope for re-rating into many of them. And that's where probably I think one could bet with some of the larger banks, including the likes of SBI, which came with a definitely I think good set of numbers and BOB kind of companies. So I think one could possibly buy into some of these companies and probably, I think, see the re-rating happening in the marketplace. The rail stocks are also driven by the larger amount of orders, I think, which are being released by the government and the growth that one is seeing into this particular segment. So it is at this point of time more a momentum than the profit performance. But one would believe that in coming quarters, I think the profit performance would probably equally be there from current stage onwards. So I think, yes, I think you can ride the momentum at this point of time in Dale stocks.
Okay, ride the momentum. I do want your thoughts on some of these PAT labs, these pathological lab companies. Dr. Lal PAT Labs is the one on our list. Deven, the company says that, a margin range of 25-26% is sustainable and discounts are not as high. and as exorbitant as perhaps they were a few quarters ago. How are you feeling about this stock?
Sonia, I think given the valuation, I think only way in which I think the kind of a one can appreciate. I think this kind of a valuation is by way of increasing the volume. The current strategy of the company is to basically expand into the smaller towns and probably try and get more amount of trades done on the number of people and the higher amount of coverage ratio. I think that could work well. However, in my viewpoint, I think everything is in price. Currently, I think the headroom as well as I think the upside is concerned. As I see it, I think is limited unless I think they produce a sustainable volume on the adding number of customers on different locations that they are setting it across. So probably I think for the time being, we'll have to wait and watch how exactly this strategy plays out and whether I think it would result into a higher amount of cost pressure also, given the rollout is happening.
Deven, I wanted to ask you about a couple of these tire companies. They've been doing very, very well. Cooling off of RM cost has been one tailwind that's worked out for them. How do you approach them from here on?
So, Nigel, I think forgetting the kind of a cost pressure that they've had in the past, probably the coming quarters and onwards, I think the price stability along with I think the cost pressure easing out is going to play out as a good thing for these companies. Along with, I think the particularly in commercial vehicle segment and off-road vehicle segment, I think the tire companies are expected to show relatively better performance. I think given the kind of strength that they have in form of passing over the cost. So in my viewpoint, I think likes of Balkrishna, I think would probably be remaining relatively a better choice to buy into, given the fact that I think their significant amount of portion is also coming from off-road. And that's where probably I think the company could possibly show relatively better performance compared to other tire companies, which are I think more on a volatile side of the profit scenario. Otherwise, I think the entire auto space, particularly, I think looks I think very convincing. We are seeing the number of outstanding orders in the passenger vehicles which are being met in this 6 months. Commercial vehicle business, I think, is picking up very smartly. And even the two-wheeler business, I think, which up till now, I think, was, I think, languishing, has also started showing the traction. So, believe that I think some of the tire companies would have, I think, relatively better time going forward as far as their profit outlook is concerned in subsequent quarters.
Okay, all right, Deven, thanks a lot